Hey, good morning, everybody. So, what a crazy market day, right? Because the SPY is gapping up. So, the first thing I want to do for people that are worried about either their bullish or bearish positions is I want to bring up something from Discord so I can share what the market flow is like. You guys can see that. So, as we closed out yesterday, let's just look at Apple because Apple's a leading indicator. As you can see, it's still extremely bearish all day. The costs to buy or the premiums to buy calls hasn't really moved. It's still at the bottom line. Stock prices up here. It's probably even a little higher this morning. We're probably at the 133 level. You're seeing that the cost to buy puts is still extremely expensive, the premium. So let's scroll down. Let's look at the big flow. Now, there is been big flow into Apple all of yesterday. So that's counter what the net flow is telling us. So then we go down and we'll look at the algo flow. So the algo flow is showing you the stock prices up here. However, people believe based on the algorithms, the price should be closer here. So what usually happens is there's a bearish divergence, right? That we can see the stock prices up here, the algos are down here. So usually we'll match up. Then we'll look at the top flows. Top flows exiting yesterday, right? Tesla puts. So even though Tesla's popping this morning, Apple's up this morning, you can see it's heavily put weighted. SPX and SPY heavily call weighted. Let me just see if we have anything else to share there. No. So let's just to bring up the chart. Let me remove this real quick. Stop sharing it. Let me bring up the SPY chart because that's important. We'll talk about the SPY and the various levels today. And I'll give you a bull case scenario and a bear case scenario. So let me bring up the SPY chart. Let me add it to our stream so we can all look at it together. Let me remove myself. Okay, so we got the SPY chart up here. What I have is I have the 4-hour chart, so we can really see the type of movement that we're looking at. Again, we were at 410. We rejected 410. We gapped down. We sold off for 10 out of the last 14 days because yesterday was a positive day. So we filled this gap right here from November, right, where I mentioned we'd have to touch 377 and change. We touched 377. Remember, when we gapped up here, we went from 377.50 to 384.50 that morning, okay? So that was a huge gap. And again, 384.50. So when we break it down into a smaller level and we see that we're going to start out up here, see, it doesn't really work on this chart, but we'll use it. We'll say we're at 383. Understand, lately, rejection's been at 382 yesterday, 382.50. We're gapping up over that. It's light volume. So why are we gapping up and should we believe it? So we're gapping up because Nike reported and Nike discounted a whole bunch of sales that happened in China. So that people are saying, okay, well, China is strong. International is strong. Nike is strong. Nike's up like, I think 12% pre-market. Yeah, they came back with a great report. Should it be up 12%? Probably not. Okay, so let's talk about Nike resistance. So Nike's up pre-market, and Nike has a strong resistance at $117, $118. So right now, Nike's up 11% pre-market, right? It popped all the way up to $118 pre-market at 4 a.m. Understand, the 118 mark is heavy resistance. So what do I actually expect to happen with Nike today? I expect it to fade earnings. Yeah, earnings were good, but I would expect it to fade and go all the way back down to like 109, 108, 107. Am I buying Nike puts? No, because I don't want to fight the trend. I would rather play the market trends, talking about support and resistance. But I'm just giving you my expectations. FedEx, again, people were extremely bearish. FedEx report came out. FedEx dropped 5%. Then it went up 5%. Then I think it closed up, 4.5 last night, something to that extent. Yeah. So the important thing about FedEx is they're talking about cost-cutting measures and how they saved $1 billion and how they're going to be so much more efficient going forward. So again, that's a positive for FedEx. And you have to understand, institutions, hedge funds, funds that must remain bullish are saying, okay, FedEx report was good. We're buying FedEx. Just like they were buying Moderna, just like they were buying Adobe off the reports. What aren't they buying? They're not buying big tech yet. Amazon, Microsoft, Apple, yeah, they had decent days yesterday, but I'm not convinced that everybody's going back to the Googles, the Netflix, Amazon, Microsoft, Apple, et cetera, et cetera. I think they're looking for more specific plays that actually come out, have decent earnings, have good guidance. aren't that weary going into next year, as we're probably most likely headed into recession. I mean, you had Jim Cramer come out and he's like, oh, Starbucks stock downgraded. I don't know what these people are thinking. China's reopening. It's a great China reopening play. Understand the Chinese economy is still very weak. China actually is showing a deficit this year for their economy, which rarely happens. They're sending people to work now that have COVID. The answer is, if you have COVID, just go to work. So understand, China is pivoting majorly. Does it make that Chinese economy strong? No, China just reached out to Germany and said, we have a strong relationship with Germany. They have a strong relationship. They're trying to get trade with Australia now. They're saying, we've never been indifferent with Australia. So understand, China is still in trouble, whether people believe it or not. But then along the same lines, Kramer's like, oh, well, Nike and FedEx are going to get a bunch of upgrades today. Again, I think that's bullshit. They might get upgrades just if institutions want to clear out certain positions. So again, we started off this live stream. I showed you what was on Discord and where the market direction is heading and how it's still very, very heavily put weighted, meaning it's extremely bearish. Yes, we had 4 straight outflow days. Who was looking for a bounce this week, early in the week? I was. Same guy that was looking for a bounce is telling you, just be careful. Dead cat bounce is there, but this certainly is not a Santa Claus rally. Now let's talk about my position yesterday. Going into yesterday, I was heavily weighted in XLE Energy. In fact, I mentioned energy was the only play that I kind of felt safe in this market. And then what did I do? My strategy was the XLE is going to go up to 88 by the end of the week. My options, I think I was in about 16 contracts, would be worth somewhere in the range of $6,000. I sold them for $1,500 yesterday. I was like, I don't trust this market. We had 4 straight outflow days just because energy is up. I'm untrusting, and I sold my position for profit. I sold it for profit, and then what happened to the XLE? It shot up to $85 from $84. My exit, $84. Shot up to $85. My end of week strategy, $88. Where is it this morning? $86. So my end of week strategy would be correct. And yet I zoomed in instead of zooming out. I told myself I had a great plan, but if you don't execute your plan, you're just hurting yourself. So although yesterday I had a green day, I was baffled all day yesterday. I'm like, God, I feel like such a loser. I almost re-entered my XLE at 84. It would have been great because I was correct. It rode up to 85 and anyway. So we'll get past that. Once you make a mistake, don't compound your mistake, okay? And this goes for anybody. You make a mistake. Say you bought a put instead of a call. Say you sold, whatever your mistake was. Don't compound it by thinking you have to ride that position. You make a mistake. You find a way to fix the mistake. And me yesterday fixing the mistake, same options I sold at 135. I could have bought back at 135. And I was like, no, I sold them for a reason, to get a cheaper entry. But my mistake was right there. I had the chance to pay a few cents over and get back into the same position. And I said, the worst thing that I could do is enter the same position, and then it tosses after, and I was right in the first place. So again, anytime you're confused, it's okay to stand away and back away from the market and let things develop. Let a pattern develop and give you some guidance. Okay, so let's talk about guidance, okay? Real quick. We have 4 straight red days on the DEX index, the DEX. Now, for those of you that don't understand the DEX, it's a good guidance towards the market direction. So the fact that yesterday was red in the DEX, the fact that the market still heavily outweighed puts versus calls tells me if I'm an institution, now you have to understand the psychology. If I'm an institution and the market is bearish and we had one decent day yesterday and it looks to be a gap up this morning, what am I going to do? Well, it's the end of the year. I'm not sure if you all have heard about this, but it's called tax harvesting. So let's say Amazon's down 40% this year, okay? And I have thousands of shares of Amazon. My financial advisor is going to tell me to sell my Amazon shares before the end of the year so that I can claim a loss against my gains. What does that mean? It means I won't have to pay tax on my gains because my losses offset my gains. Then what do I do if I want to get into Amazon because it's still down 40 or 50% this year? I will buy it January 1st, 2nd, 3rd, 4th, 5th, 6th. So that's going to be true for all of these beat up stocks. Meta, which got an analyst upgrade last week and touched 123 and then went back down to 114, it might be popping this morning to 115, 116. Would I trust it? No, I'm not trusting the market. Santa Claus rally last year was a 3-day rally. It was an extremely strong rally, and there was reason and earnings and forecasting behind it. Understand, we're still giving Ukraine an extra $39 billion. We're still doing a new bill that's about to pass today for $1.7 trillion. We're still printing money, which tells me our economy is still struggling. What am I paying attention to? After hours, we have Micron today. Before hours, Carnival's coming out. Again, Carnival's supposed to lose 98 cents a share. I think they might lose over $1 a share. Carnival's popping pre-market. It's up 2%. We have GDP on Thursday, PCE and durable goods and home sales on Friday. So everybody that's expecting this Santa Claus rally, we still have a bunch of data to come in, and the Fed could come in at any time, and the U.S. dollar could spike at any time. So I'm watching the U.S. dollar, the 2-year, the 10-year. Do I believe yesterday's movement? Dead cat bounce. I was calling it 2 days ago. I was calling it on Monday, expecting a dead cat bounce. Didn't see it Monday. Saw it Tuesday. Sometimes these bounces will last 2 days, so it would not surprise me if the morning is green and the afternoon is red. In fact, that's kind of what I'm figuring and counting on. So let's get right into the SPY, okay? SPY levels of support and resistance. I'll give you the bull case scenario. Bull case scenario is we might touch 381 again. Again, we're at like 383 pre-market. We might touch 381 again or 380 and change. This is your bull case. So yes, bull case, bottom right there. And then we go up. If we break 385 is going to be a key level. Then the next level up is 388. So again, bull case scenario, market's strong today. Maybe it's strong tomorrow. We're going to see 388 on the SPY. So we're sitting at 383 now. Yesterday we closed at 380.54. Even on a bull case scenario, I do think we would touch 380, 80, or 381 today. So even though we're up pre-market, I do think the market will be red at some point during the day. Bear case scenario. Bear case scenario is, shit, we saw it yesterday. SPY rejected 382. It rejected 383. We know 383 has been a rejection level. We're opening up a little past 383. What's going to happen? People are going to buy market open. Oh, we're 384. Then all of a sudden from 384, we go back to 383, 382.50, and then 383 either becomes support or resistance. Again, bear case scenario, all of a sudden it's resistance. If it's resistance, then we're going back to touch 380. We'll bounce off 380. We'll try 383 again, but likely we see 378 today. Again, so bear case scenario, and if we see 378 today or even tomorrow morning, let's say, okay, again, bear case scenario, then that tells me 375 and 373 are coming before the end of the year, okay? So again, we're at 383. I'm saying bear case scenario, we could literally lose 3 to 4% before the end of the year. We only have probably like 7 trading days left in the year, maybe 8. So I'm saying it could get ugly towards the end of the year. Again, there could be tax harvesting. And again, if I'm going to sell and I'm a big player and I'm going to sell, I'm going to let the stock go up, even if I'm at a loss on Amazon of 50%. If I get that 2 extra percent today because it's up 2.5% at some time, that's my sell point. I'm like, okay, my loss is still 37%. I'm still going to carry that forward, use tax harvesting, and I'm still going to invest in the first couple of weeks of next year. Again, there's no rush to reinvest their money. It's all about doing the best for their tax purposes. So again, lighter volume yesterday. I wasn't a strong believer. If I saw volume yesterday of 100, 120 million on the SPY, I'd be like, okay, reversal. But all I believe I saw yesterday, which I called, was a dead cat bounce. So my problem with dead cat bounce is, damn it, I should have been holding my XLE. It wouldn't really matter market direction. Even when the market was tanking on Monday, energy was strong. And I was like, I'm in a great position. And because of that, I just became untrusting of my strategy yesterday morning. Zooming out, fine. Zooming in, because I get anxious when the market opens. I was like, okay, well, I'm going to secure profit in case the market tanks on itself because, again, dead cat bounces are just that. It's dead cat bounces. There's no data or analytics pushing the market higher. It's just the market was oversold. Let's remember, market was down 10 out of 13 days, and the last 4 days going Thursday, Wednesday, Thursday, Friday, Monday were all red days. Now, if you look at the DEX, again, 4 straight red days on the DEX, the DEX, including yesterday. So although yesterday was a green day, and again, I showed you big money for Apple, Tesla, it's still extremely bearish. So your dead cat bounce could last a day and a half, 2 days. I still think we're turning more red towards the end of the week. That's just my opinion. Can my opinion change? Sure. If I see steps up in the market, if I see support levels, I will change my opinion and I'll say, okay, the support is there. I can't ride or go against the market flow or momentum. Remember, we're here to make money. We're not here to be correct. If we were here to be correct and get check marks and get 100%, yes, you called it. That's how we get paid. It would be awesome. But that's not it. You got to put your money where your mouth is. You actually have to leave your investments. Again, so I'm upset I paper-handed my XLE yesterday. I would still be holding those, and I'd probably hold those till 88 or until I saw a turnaround. Understand, if the market tanks, so should energy. So again, watching closely. Key levels, again, of the SPY, 373, 375, 378, which I believe we might touch 378 in a bear case scenario today. Then we're going up to 382, which is was resistance 4 times yesterday, but we're passing that pre-market. So let me just see if we have any questions today. Oh, by the way, you could still, actually, I don't think the Moomoo thing is still working. I'll have to talk to Carlos about that. You can still join Moomoo, and I think you get 5 free stocks if you deposit $100, and you get a $10 coupon. I think they're running it to the end of the year. No, it might have ended December 20th. So you're not getting that $10 coupon anymore. So instead of 40% return, probably 30%, but there should be a link below to join Moomoo. Deposit $1,000 before the end of the year, you still get 15 free stocks. So that's like 100. They probably use a 10% return. So if you put $1,000 in, you get maybe 10 free stocks, 10 to 15, what 20. Holy shit up. So I mean, it makes sense. Everybody else, as far as you want to join our Discord, it's 50% off. Just disappeared. Oh, I'm back. So yeah, that's basically it. I'm going to head over to Discord. If you have specific questions, please ask me there. SPY ranges, again, bear case scenario, you're going to see 378 today. Bull case scenario, on the downside, I still think we see 380, although we're opening up at 383 and change, and the market looks strong. Why? Because the flows and algos are still showing me bearish divergence. The DEX is showing me red for 4 days straight. And if the DEX is red, it's a key indicator, and we've all been using it the last few months. And if you're not using it or don't know what the DEX is, then you should join Discord. You should use the Flow and Algos room. With that said, I do believe Romeo is going live today. So everybody, please follow me over to Discord. He's not going live till about 9:15 or 9:30 this morning. He mentioned it yesterday. Should be good. Tuki's going to wake up. He's on the West Coast, so he'll be giving his trade alerts out. He woke up late yesterday, 3 for 3, 200 percenters, 145 percenter. Please come join me on Discord. See you guys later.